Hello, everyone. My camera's a bit weird today. I don't know if Elgato's software is bugging again, so I'm all zoomed out. What's up, guys? How we doing? I haven't done one of these finance streams in quite some time, so I decided, yo, Money Boss, what's good? So I decided to go and do one because I want to be starting to go and do a series on YouTube. Build out like a slide deck and everything all about FaZe's financials. So today, I see you're ready for the finance stream, dude. We're gonna have you hear the lo-fi music is in the background. We got Excel open. There's an investor deck over here. Um, like it's we're gonna be doing it. I want to do a big YouTube series all about like the business overview of FaZe and esports. Do like kind of like a deck that you would see that I used to make for my old job. You're not hearing the lo-fi? Is it that low on stream? I normally make my music super low. I make my music super low, that way the Twitch algo doesn't detect when I go and do copyright music. How's that, Money Boss? I'm not gonna have the just playing because it is simply the stream beats. There we go. It's simply this over here. It's the stream beats lo-fi playlist. But the whole goal is to eventually make a YouTube series where I break down business overview of esports companies. The easiest one to do is FaZe, simply because they're gonna go public via SPAC. So all their data's out there. A lot of the data's out there. So that's why I'm picking this one. So I want to do a big business overview, break down the financials, and yeah. And then that way we can do a live stream when the company goes public and watch trading for the day, I guess, and all the interviews. It's super interesting because it's the only esports org that's gonna go public. I think 100 Thieves will remain private for a while until it gets sold. To commemorate this stream, we got the FaZe G Fuel shaker. And also streaming this is super easy because I do the work anyways, and I can just do it on stream and chill out with you guys and monetize it. You always gotta be thinking like that. They've had to refile a couple times. We'll just get into this. 8K is bullshit, if I remember correctly. If you guys don't know, all SPAC 8Ks and annual filings and all that stuff like that are very much bullshit. Because there's never anything to them. Like, this 10Q is typically about the holding company. SPACs as a entity are hilariously boring. Because all they are, for those of you that don't know, I know Money Boss may or may not know this because he works in finance. All they are is just a pile of money that's publicly traded. So inherently they only have a value of their cash. Thus why you get balance sheets that look like this. Total liabilities, very little expenses. It's normally just warrants, various other holding assets, well, holding liabilities. It's all just cash and treasuries. So that's why you never have people really model out SPACs other than their holding structure when it comes to the warrants. Because for the most part, what you actually give a shit about is what they buy. And for this, which is technically speaking, it's the B.R. Riley. They have it in this deck that was out there in October. It's the B.R. Riley like something SPAC. I forget the actual name and what the actual ticker's trading under. Because all you care about for SPACs is when they announce that they're buying something. And then once they announce that they're buying something, you can go and just buy the SPAC and hopefully go and get your piece before all the normies come in, like for FaZe Clan, and buy it on the day of the IPO when they turn to ticker symbol FaZe. I mean, B. Riley's not a big name in the SPAC market. For those of you out there in finance, they are pretty shit. In all honesty, I haven't done like a big major SPAC and haven't done things all that well. But what we're going to be mainly doing is just inputting the financials from both the deck, because I actually have some half decent information in here. I'm not going to go over a super ton about all their industry stuff, because for the most part about it, if you know esports, you kind of know the background. I think some of their investment thesis is completely and utterly bullshit, because you get shit like, where are they going to be growing into? I mean, one, some of their comps are ridiculous. The fastest growing sports brand on the planet when it comes to social media is actually F1, and it's not even close. It's like not even close. So the fact that they kind of cherry pick some of these, like UFC, the Lakers, they should have just done the NBA as a whole, and added F1 in there, because F1 is the fastest growing sports franchise or sport when it comes to social media. Some of the other things I think are kind of like, NASCAR is losing a lot of broadcast viewership to F1, and so is IndyCar. Again, I don't know what they didn't put F1 on there because it looks like a bad comp, really. Some of their, like, I find it super weird when they look at some of the stuff like where was it, where it's like they're growing industries that they want to like penetrate. Which one was it? Because I found it hilarious. Was it under investment thesis? Oh, it was this one. It was this slide. And here, I'll just make it big for you guys. It was this slide that I had a huge, hilarious, like, you could tell this was going public in 2021 before the market actually cared about things. Because most of this is half decent, right? It's content. It's a lot of content. It's esports. So live events, content creators. It's a really simple thesis to get behind. You get to buy essentially a group of the content creator ecosystem. You get to have exposure to that, which is not a bad thing. And for a lot of investors out there, that's what they want, instead of having to go buy the shitty platforms like Twitter or Snapchat. And you can't isolate YouTube because that's underneath the giant Google umbrella, even though it should be spun off. You could go and buy something like FaZe Clan, where you go and get direct content creator exposure. And you get a little bit of access to gaming without having to go buy a gaming company, because most gaming companies really have not that great financials. Activision, only one Take-Two is half decent. EA is going to get sued out of their ass eventually. So like this is a great little area, content plus esports and gaming, that typically investors want to go and get exposure to. New growing industry, very niche, but has a lot of, especially if you have a first mover advantage like FaZe does, huge potential growth, and it's a great thing to have for the long term. Brand sponsorships, whatever. International, yeah, they're gonna have to move internationally eventually, but that's every single company that starts off in the US. Whenever they go public, whenever they start doing things, they're always like, international, look over here. We can go over here, just because investors need to have a painted growth picture, or else they can't think for themselves. It's the opportunities for tomorrow, where I had a big. This is where you could tell the B.R. Riley guys came in and were like, "Hey, we need something to give them, something punchy. Live events, tournaments, stuff like that. Esports, fair enough. Metaverse, NFTs, not looking so hot anymore. Of course, remember this deck. We're on slide 21. This deck was done in October of last year. Game publisher partnerships, Easy W. Um, its subscription offerings currently undermines the entire business model of FaZe, to be honest, because the entire business model of FaZe is, hey, they're a record company. For those of you that need an analogy, they're a record company. They spot talent, they acquire that talent early on, use their brand to then boost that talent in exchange for a piece of the earnings. For record companies, it's like, depending on the artist, 70 to 80% of the earnings, but they take all the risk, right? They produce the album and all stuff like that. Same kind of thing with FaZe. FaZe goes and picks a person. You could go and give the latest thing, FaZe Pros, that won Phase 1. They invested a lot of capital into him. Gave him $1 million in crypto. Sucks. Big brand deal with two big brands, Nissan, because he got a GTR, and Ghost. He got like a $250,000 sponsorship. That's a lot of startup capital to go and say, hey, you can game pretty much for the next 5 years and not really have to worry about anything if you don't piss away your money. Subscription offerings, though, because typically FaZe, it's, hey, this creator's underneath our umbrella. They're going to grow the way they grow. I don't know how many people are interested in the overall FaZe brand content. I know a lot of like the old house videos and stuff like that really made a mark on some people, but are you going to be paying $2 a month, $5 a month if we go to Netflix, Hulu without ads, $10 a month to just watch FaZe content? I imagine very little people are actually going to do that. That's a big red flag for me, is they think already that they're a massive content house. They are not. Fan club, a membership for exclusive merch, I could go and see. That's fair enough. Real money gambling, huge red flag. Gambling is such a legislative intense business, unless they have a partnership with DraftKings or something like that to be able to smooth out the process. Ask Fubo TV how their entire rollout into gambling is going. It's not that well, because they found out it's really hard to do, especially in the US, when you can't just do it for the entire country. It's got to be state by state. So real money gambling's really tough. Live events we already covered. It's this one, virtual dining concepts, that I have the biggest puzzle with, because I know they have, and they line it out here, partnerships with McDonald's. Where's the slide that shows it? They have partnerships with McDonald's. Other than like the kind of we'll do our own meal type of a thing. I don't understand how you're doing virtual dining experiences, unless it's like pay money to go fucking eat with a FaZe Clan member. And even then, some of the members have to be down for it, unless it's in their contracts. So that to me was one where I'm like, meh. But overall, we go and see feasible, probably not feasible anymore, extremely feasible, marketing bullshit, most likely impossible unless they have a really good partner in it. And then yeah, but some of the things that we can gain from this that I'll start breaking down here in the spreadsheets is all this. They're kind of I know they had to go and refile for some of these, because they're going to meet some of these, they're going to miss a lot of these expectations, but essentially they think they're going to grow their revenue by 10x, especially when it comes to M&A. So they can acquire most likely smaller esports teams. Who knows? Content's going to be a big one, it looks like, and brand sponsorships. Gross profit going from 20% margins to 32%, half decent margin expansion. You get that once you go more digital. EBITDA as going from negative to pretty much 10xing your EBITDA is really tough, even if it is adjusted. That's really hard to go and do. Three acquisitions they're going to go and do, so I imagine most of them are going to be different esports brands. If not, they're going to have to buy creators or something like that. Expanded slate of living and scripted programming. Phase 1 was their trial for that. Didn't go over that well. But who knows? They're going to get a big swap of cash once they go public. So there's that. I thought they had a bunch of other ones in here. Oh, yeah, they did. I love some of these sponsorship deal things. Like, I love the footnotes too. Reactions, comments, shares, retweets, likes on Facebook, Twitter, Instagram on main account. This is a very cherry-picked metric because only people that actually really care about the sport brand would actually go and say, oh my god, I can't believe we got this sponsor on board. Let me go and say F1 for instance. Very little people care that AWS is handling all their analytics. No one cares. The rest of these, for things like the NBA, they go and they add on a gambling patch to the jerseys, or like the MLB, right? Sponsorship patches for the first time were this year. People care about that because it impacts the sport. It impacts the look of the sport. So people will go and tweet about that and all stuff like that. For the rest of these, no one really cares. Who cares that an NHL team is sponsored by DraftKings? Very little people. For the FaZe Clan members, it matters that they're partnering with these people because they get free shit out of it half the time. I don't think that this is gonna happen at all. Maybe Spotify and Apple for podcasts. But if you've met or if you've seen any of the FaZe Clan content, Nickelodeon's out. Except for maybe some of their younger members. Netflix, maybe, if they're doing like a Drive to Survive thing, although like documentaries and stuff like that, maybe. Music, they got Snoop Dogg on the roster and stuff like that, but meh. I do like how NFTs is a big thing. And they're going to be launching a food brand. Both of these are probably not going to really happen that much. Again, I don't know why F1 isn't on here. It's the easiest publicly traded sports comp. Okay. We'll reference back to some of this later, maybe. But for the most part, we're just going to go through the financials and put them in a spreadsheet. So, and in case you guys were wondering, when you go and do this type of stuff, always do the latest filing for the S4, especially when they get amended. Like for any S1s and stuff like that, and for SPACs S4s, always do the newest one because it changes drastically from 4 months. So that's what I got. I believe this one. This is the November. No, that's the November. I forget which one this is, but I think they just differ in terms of their balance sheets and stuff like that a little bit. This one has more information. It's all pretty much the same stuff. One just breaks it down into a little bit more. Again, these are pretty simple financial statements when we get down to it, because they're never going to launch their full financials until they do the S1 and the IPO is confirmed and all stuff like that. I mean, it just recently got confirmed, so. I want to do quarters first. And let me know, guys, in chat if you can't see something. If it's too small and stuff like that. Let me go and do... Really? It's not going to show up revenue? This is half of doing financial research, by the way. Control F. Till you actually find what you want. Stock price, blah, 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 blah. The biggest risk to this entire company is their human capital. I mean, you could see last week when a FaZe member got kicked because he used racial slurs. Human capital is going to bring this, is going to just be hilarious to watch when this thing goes public. Ooh. Oh, that's just their estimates. Yeah, I'm just looking for, here we go. This is what I was looking for. This is what I was looking for, the revenue breakdown. That's what I was looking for. Because then I can go and kill all this, because this is an old existing model. I can kill all this, zoom in so you guys can actually see what's going on. Old comments. I normally have a key for that. Because now we can build this out. So we're just going to go and do revenue. And then it's going to be how they're going to go and get their revenue. So we're just going to... And it's all going to be then year percent as well. Actually, Alt H-I-R, insert a nice little row there. There we go. I actually have buttons on my Stream Deck for shortcuts doing just these things instead of knowing the keybinds. And this is actually interesting because we actually get to go and see what some of the, how they get some of their revenue. I'm not going to go millions. We're going to go thousands. There we go. Sorry if this is too clicky for you guys also. I have a mechanical keyboard, I'm sorry. So now we can go and actually put in some numbers. And because people in finance, like myself, are lazy, Just copy paste, really. I like to go and put everything in currency. Just makes it easier for me at the end of the day. And yeah, just copy paste everything. Whoa, actually, I fucked up. That should be total. I have a special blue that I use for all my inputs. Whoa. On my text. And then like I said, we're just gonna copy paste. What is insane is how much Instagram revenue they do. I'm also gonna do. It wouldn't be a rev build if I didn't overcomplicate it and also do percent of total. There we go. Like I said, we're just gonna copy paste everything. If this was something like a Centio, which was such a nice financial subscription to have, I would just export it all to an Excel and copy over anyways. But since I don't have Centio anymore, I'm just gonna do it like this. I know for some people this is incredibly boring. And we're just gonna go and do, always double check the math. Yep. And then just lock in the J. That way it carries over, right? Yeah. No, I locked in the cell. I want to lock in the row, that's right. There we go. Really? Twitch is only 8% of their rev. Interesting. I'm surprised they get that much rev from Twitter too. I forgot to go and do my year over year too. There we go. Again, people in the finance industry are lazy, so this is how literally people do this all over the place. This is actually going a little bit overboard almost. Some people just rip the financials straight from Bloomberg and a predetermined template. I don't even put the effort into doing this. Or Canalist. That's another one you see people use all the time. Canalist, where it's pre-built models. You just alter the source. Nice little year over year. Wow. Interesting. Interesting already that YouTube is pretty much a GDP type growth rate. Meanwhile, you have things like TikTok that are growing at insane numbers, which I guess, given the financial media, I mean, given like how big of a deal it is it is currently, I shouldn't be that surprised about. Now that I think about it, the growth of TikTok, the fact that they're monetizing the shit out of it. And then what's super simple is we just do the same thing over on our yearlies. Same formulas and everything. Oops. Make that black. There we go. Huh. I'm just really surprised that they make this much money off of Twitter. More than anything else. And for those of you that don't know, the whole idea of just going and doing a revenue build is pretty simple. It's just figure out how the hell they make money and an easy way for you to track it. Oh, never mind, I was mistaken. I read this all wrong. They actually do have ARPU. Huh. You can actually build half decent mom off of this because they have their reach too. Yeah, I'm an idiot. I'll admit it. I fucked up. This is not the revenue, this is reach. I'll just go and call it social. There we go. All right, since it's no longer revenue, we don't really care about. Let's just call it numbers. Except we want to put a custom. There we go. Cool, cool, cool. And then we're gonna slide, that's actually fine. actually haven't done 20. Of course, I haven't done 2022 members yet. What am I even thinking? Year hasn't ended yet. But yeah, their growth on TikTok in particular is impressive. Their growth on TikTok is particularly impressive. Twitch, not so much. Although some of their creators don't even use Twitch. Whoa. A lot of this labeling stuff and this color coding, you don't have to do. I always do it just because that way when I look at it, I know what's an input, what's not an input, what's a formula, what's not a formula. That's really all it is. And if I ever go and give this to someone, I normally go and put a color code sheet on it too, so that they know as well what is what. Okay, so let's take a look. And I'll help determine what a whole bunch of these things actually mean. So what we have here is essentially FaZe Clan's total social reach. So at the end of March last year, total social engagement, I'll zoom in for you guys. Total social engagement was, maybe I should bold these two. Total social engagement was about 355 million people. Q1 2020, 2022, almost 500 million. The majority of those in 2021 were YouTube, with Instagram being a close second. That all shifted though, because now 35% are YouTube, with only 26%. 35% are Instagram versus 26% are now YouTube. They essentially flipped. So obviously Instagram becoming more and more important for them, probably also because the way that they go and do total engagement and total reach is the summation of both their core brand FaZe and also each individual creator. So you could have certain creators gaining a lot of social media traction on YouTube, etc., and that impacts them a decent amount. TikTok is one where they've grown over 100% just in the first quarter, which is impressive. It just shows you how fast of an outlet it's growing. If we look at the full year, 2020, YouTube again slipped because Instagram actually slipped too. Just double check the formula. Mainly because TikTok is just growing so fast. Twitter, no surprise there that it's actually the slowest growing out of the bunch. Absolutely zero surprise there because Twitter's a dying platform, although Instagram decelerated in terms of percent. But the slowest growing channel of them all is YouTube, which is kind of surprising, given that that's their bread and butter, right? They're born and bred off of YouTube. And then actually we can break it down even further. And I will. So they give us the data over here. We have the data. And again, if you guys need me to zoom in, please let me know. We have the data over here of just actually like what their breakdown is in terms of their YouTube subs versus what their affiliated channels are. So, and like what their affiliated channels are, which are brands that they own. So Snoop Dogg, all those other types of people. Nuke Squad, if you are a fan of them, love me some FaZe Booyah. But for the most part, and we'll actually break this down to a subcategory. And the exact way that they do it. Because that's always the easiest way. Because this actually will help us determine where the fuck all these people are coming from. So no surprise, we're just gonna cell reference. There we go. And again, the magic of copy paste. And then I'll add in all the other things too. Insert comment, boom. That way I know what those are in the future. Then we do our quick math check. Yep, adds up. For the co-branded FaZe channels, these are insert your favorite FaZe creators channel. I already know what's hilarious is some of the bigger names on here. You can already identify like who makes up more than others. For instance, FaZe Rug has, what is it, 30 million or 25 million YouTube subscribers. So he's a fourth of this alone. So just like we did with the above, we'll do year over year and percent of total. Make that black. And we can see, of course, that what really matters here is all their affiliates. Because someone may not care about all of FaZe Clan, but what they do give a shit about is their favorite creator. Like, I don't really care about really the vast majority of FaZe creators. I care about people like FaZe Jev and FaZe Dirty. And that puts, and those are all co-branded channels. Like Dirty has 500,000, Jev has almost 5 million. Let's get him to 5 million, guys. And you can go and see that the vast majority are these co-branded channels. FaZe affiliated channels, this is, like they said, Nuke Squad, people like Snoop Dogg, because as soon as you put FaZe in front of your name, if you're a brand, depending on how you brand yourself in your contract, you will have to be a part of this. So Snoop Dogg probably has 9 million subs on YouTube. And in fact, let's just double check. $8.5 mil. So he's obviously branded, he's obviously affiliated with them. So we can go and see where that increase came from. I want to go and say also somewhere in here, they do go and give us spot like revenue breakdown. So ARPU and things of that nature are going to be important in sponsorships, because then we can go and see how much sponsorship revenue they get per sponsor. Exactly. I wonder if they do it. Oh, and they do it year end too. Okay, so we actually got a revenue bill that we can go and do, boys. We will actually have a revenue build. This is fantastic. Of course, ARPU is going to be based off of total social media reach and based off their content. For those of you that did not know that. So we'll delete all of our mistakes. Delete total. Money Boss, what's good? How you doing? Money Boss, is this how you're creating all your models? Or are you at one of those companies that like uses Canalist and all those things, which are helpful? Okay, this is only revenue build. Sometimes I put gross margins on here. It all depends. I put an extra 5 in there. Ba-ba-ba-ba. And we'll just get our year over year in there. This is also going to be a company that's going to have so many revisions in their numbers just because if they lose someone, if they gain someone, it's just going to swing wildly, right? They just lost, they kicked out someone with a 1 million plus YouTube subscriber channel. Obviously, they're going to lose some revenue from that because they don't get their cut from that channel anymore. Okay, now we got revenue in there. We're gonna scroll. We will skip ARPU for now and sponsors because I want to do revenue by type, because then that helps us out a lot. Because then we can do some of the other nitty gritty. Is it time for a G Fuel break? Watch this. Okay. Revenue by type. So brand sponsorships. Again, same thing over here. I know fonts don't match at the moment, but when you copy pasting, doesn't have to. But that's all before you send out the spreadsheet to someone. You just do all that shit. And for the most part, people don't care if fonts are mismatched. And if they do, they're just a tight ass. So here's actually where we really go and get the in-depth look at how the fuck FaZe actually makes money. And the answer is, mostly it's branded partnerships. Consumer products is extremely low. Esports is actually decent. Oh God, I forgot this. Shit. Put all that into currency. There you go. I just wasted so much time and energy right there. Branded partnerships. Content. Make it a couple mil there. Consumer products. Make it a couple $100,000 there. Esports. Pretty much just an advertising expense for them. Because the main way that they make money is branded deals. And once I fill in the rest of the money, we'll exactly see just how much. Is this font too small? Do I need to zoom in more? It's super hard to tell on my brief, on my small little what's being outputted to stream view. If it does need to be bigger, please tell me. Esports was actually a very good year for them. A very good quarter. Probably because this year their COD team's doing half decent. I also know why some of these numbers are coming out super small. It should all be Arial 10. There we go. It's probably a little bit more helpful to you guys. Okay. Percent total. I always do, if it's a formula, it's always in black. Now again, these are just the quarters. This isn't the full year. We'll get to the full year in here in just a sec after I finish up. Just doing a quick little year over year. And just because it's quarters, I'm not gonna, it's more interesting when we go and look at the full year for how much money they make per category. And it's revised, of course. So 16 mil, because it's in thousands. And branded partnerships, because remember they made $37 million in 2020, 52 mil in 2021. And for this, watch, if we do the quick math check, look down here at the sum, matches up. If it never matches up, typically you fucked up somehow. God, I thought I fixed this. I said Arial 10, there we go. Very rarely do fully audited financial statements come up with errors. And if they do, you better bet against the company immediately. Because like I said, it is extraordinarily rare. There's a handful of cases where that's actually happened. And then finally, and then just like previously, whoa, oh, that's right, it's like it's stupid like that. Gonna do a year over year percent total. Our quick little year over year. So, here we go. How FaZe Clan actually makes money. It's all branded partnerships. 47%, nearly half their revenue is branded partnerships. And here I will zoom in case you can't see. It's nearly all branded partnerships. 47%. Content is about 30%. Consumer products, so that's jerseys, cups, other t-shirt, other kind of gear, 11%. Something that I wouldn't cut out if I was looking at this going, shit, where can we save a couple bucks? I'm just looking at if they expand upon what other is. Esports, obviously all their esports teams, all their net winnings and things of that nature. Um, Not that bad, to be honest. 5.8 mil across a couple esports. That's just revenue, though. Esports teams are incredibly tough to manage. Cost, for instance, you got to pay someone, and if you're paying for top tier talent, contracts can get outrageous. Esports organizations, esports in general, from what I understand, operate essentially at break even if they're lucky, barely profitable if they are not. But because it's only revenue and they don't give us on their financial statements, of course, they don't tell us exactly how much like the esports cost is. It'll just be wrapped up into the general cost, pretty much. But nearly almost all their revenue is brand partnerships, because, like I said, FaZe is a record company. At the end of the day, they're giving brands exposure. They're giving people exposure. That's what they're known for. That's why they have. I'll readjust this font. Because after all, at the end of 2021, as of March 2022, they have almost 500 million social media followers. Majority of them on YouTube and Instagram. So brands go to them because they're essentially a cheap form of advertising. Particularly some big brands, like I said, Nissan's one of their big partners. Super easy way spending. Let's go and say Nissan spends almost all of this. 24 mil to go and get essentially $500 million worth of exposure across social media to a niche audience isn't that expensive for them. It's not when you're talking about a company that brings in billions of dollars a year in car sales. So, I mean, we could go and even do the math here. If it's, well, these are all thousands, so for them to go and sell $30,000, let's go and say that's a Nissan, a standard just Nissan car, four-door car. If Nissan's spending all this just in their branded deals to go and have FaZe just directly go and sell 800 cars, let's go and say that's how many cars they would need to be able to sell to break even on just the advertising expense. Let's go and say, I don't know, 5%. 5% of actual FaZe Clan fans buy a Nissan because they're that dedicated. They sell 41 cars. I mean, it's not a bad marketing expense for them, to be honest. And this is also other things. Was G Fuel, now Ghost Energy. This is Scuff controllers. This is a whole bunch of other stuff. But I was just trying to go and make a real world example there of like how $24 million, and essentially for other people's advertising, it's actually not that bad when you think about it. That's something I like to go and do in these models, is to give myself a real world example of like to put things into perspective, because FaZe is just pennies. 52 mil in revenue is not a lot at all. Now they had some other pretty interesting metrics that we can go and do. So one of these is ARPU. So we'll go and call this content rev build. So we will go and reference out content revenue. I should just do it out, content rev. And we'll go and have ARPU, have percent year over year. So that's average revenues per user. So then users, we'll just go and put down users, comma calc, because we're doing the backwards calculation. Again, I mainly focus on media companies. So this is something I do regularly. And average revenue per user is something that you want to pay attention to. Earning 8 cents per average user, that's pretty fucking ridiculous. So that should be times. Because for ARPU, you do, it's rev divided by users equals that, right? Yep. So that's your, times 1,000. Let's actually go and do this. It should add up roughly to their YouTube subscribers. Oh yeah, I forgot to divide by 3. But, I mean, it's essentially what you go and get for just their YouTube. They're getting 3 cents per YouTube sub. This is more just straight off users. So that would also include if you're going and putting in Instagram, anywhere else that they get advertising, probably Twitch as well. That should be blue. Okay, same thing over here. ARPU was 12 cents. Divide by 3. Does this make sense? Yeah. Always got to do yourself a quick gut check on these things. And this one's going to be divided by 3. All right, divided by 12 because 12 months of the year. ARPUs were, Jesus Christ, their ARPUs are terrible. $0.32. That's pretty shit. I mean, to go and put this in perspective, Spotify is getting $3 per user. That's a direct subscription service. This is them getting it derived from other places. Here's the most interesting one. Sponsors. So we'll do total significant sponsors. And of course, we're going to go and have sponsor rev, and then rev per sponsor. That way we know directly how much essentially each sponsor is paying them. So, or at least an average amount that they're getting paid per sponsor. That's important. Why? Because we just, because if we can go and say, okay, we think that they're going to go and get 5 more sponsors in the next 5 years, we can instantly figure out what that means for FaZe's bottom line. It's actually a pretty simple company to build out when all's said and done. Money Boss, if you're still here in the stream, let me know if I need to zoom in on anything at all. So total significant sponsors, 6 and 9. So rev per sponsor. This is essentially going and saying how much each contract's worth. So a little less than a mil per sponsor. A little less than a mil per sponsor. Now that's just for 3 months, so that's a 3-month contract. Presumably. So they had 6 again here, but then they had 12 at the end of 2021. Again, these things change all the time though. It's a simple snapshot, not indefinite. So same type of a thing over here. So now we go and see, oops. Essentially, a typical FaZe Clan sponsor revenue is about, currently at the end of 2021, about 2 mil a year. We'll go and add on a year over year on this too. And why not add one over here as well? Of course, sponsorships come, normally they're seasonal. So quarters will be very rough for them, but what they want is at the end of the year. Of course, they got more sponsors, and revenue didn't actually grow that much. What was it? Okay, 50%, but their amount of sponsors grew 100%. So it's pretty interesting, to be honest. It's interesting. So we can now do the incremental, how much each sponsor cost. Essentially 2 mil. So you could go and say, now I don't know within their contracts if there's a increase when it comes to over the time span of the contract, if it grows by a certain percentage. But we could go and say, okay, next year they're gonna have 13 sponsors, and then we could go and take this and do this times this. Well, actually, we can go and say they're gonna go and make 2 mil per sponsor. And essentially go and get their revenue for next year. Really easy build out that way. But we kind of know what each brand is worth to them. Which is really what if you're a financial analyst, you care more about. I'm just looking for, they had, yes, operating results. So we're going to go and check that. We're going to check that against this other sheet. So March 2021. Ooh, okay. 21, blah, blah, blah. Oh, did they revise it? Or is it the same? Oh, no, it is the same. However, we actually got... No, that's just a yearly statement. It's just a quarterly, my bad. Should be, and it is the same. Okay. Good shit, good shit. But I think they're only doing quarterly income statements. They're not doing quarterly balance sheets and stuff like that. They're doing like give you the quarterly like cash flows. That's about it. But that's fine. That is all good in the neighborhood. Like I say, guys, we figured out some interesting facts already. One, how much each FaZe brand contract actually matters to them, which is they're making about 2-ish mil per contract per brand deal. So that's your Steel Series contract. That's your Ghost Energy contract. Your, I guess, XG Fuel contract, whatever you want to go and say. They make most of their money through those brand contracts because they're pretty easy to sign. They make the second most money from their content, which is from all of their different creators, as we know, from our social media page. Most of their YouTube subscribers come from their co-branded. So those are, like I said, your... did I do the full year for that? I did not do the full year for that. Did they have the full year for that? They did. I forgot to go and do it. It's a big oof on my part. But we can go and see. Like I said, 86% is those co-branded creators, and not like the pure FaZe channel. And essentially, like this quarter, they must have acquired Snoop Dogg. We already figured out the math. Snoop has about 8.5 mil subs. This essentially was Nuke Squad. Nuke Squad probably grew a bit. I think they have just about 1 million subscribers for their main channel, or maybe 500,000. But the majority of that is Snoop Dogg when they went and essentially brought him aboard to FaZe. So we also managed to go and find out their average revenue per user on their content, etc. So a nice little overview there if you fell asleep at any point in time during the stream. It's not the most exciting content. I will admit that. But we did get to figure out a decent amount. Actually, no, those should all be numbers. Oh, it should all be my custom number. That's what I'm thinking of. Money Boss, if I see one tweet about you talking about how much I use a mouse, I'm banning you. Sometimes it's just faster not to use all the shortcuts. Of course. I'm being yet again an idiot. Am I? I am. 106. Okay, there we go. Again, the vast majority of their kind of social media reach is through, especially on YouTube, is through their co-branded channels. What is it? I think we could just go and put in like FaZe rug. $21 million subs. And we can go and see he alone did that backwards. He alone is 20% of their entire YouTube presence. Okay, we got some of the fun stuff out of the way. I always like doing the revenue builds and some of these other things. They're always very interesting to me. But now we get to the real stuff. The moolahs. It's year ended. I don't really want year ended. Where's your quarterlies? Was it on the other one? It was. Okay. Whoa. Set this at like 105. One oh three. There we go. I always like to go and see what we're doing. Rev build. Let's just double check. Yep. Okay, time to go build out quarterlies. Boom. What are their cogs? Jesus. They're 23% gross margin company. For pretty much all digital with a little bit of clothing. Sales and marketing and G&A, they say, is their only cost item. Which will fuck up some of my formulas. But that's fine. So sales and marketing. %, not terrible. That's their gen and admin. That's just outrageous. Even for a young company, it's outrageous. Because the first thing that pops into my mind is how the fuck do you have this much general and admin costs? I know you're a talent-based company, but like you're at negative 56% EBITDA margins. I mean EBIT margins. Am I doing something? What? Oh. Wait. Oh, I did fat finger something. I was looking at it, I'm like, how did I go and get the wrong gross profit on there? It's because I did, instead of 804, I did 084. So, interest. We'll do other, we'll do interest, and then other. This is typically where you try and add back as much as possible. 904. Whoa. Change the color of my keyboard right there. Negative 70. They want you to interesting. Okay. One 851 11. So they don't make any money at all. The biggest things, they got to get this general and administration costs down. Even then, they're still going to be scraping by to make any sort of cash. It's almost embarrassing how much money they can't make. In all honesty. Let's phase up these margins, am I right? Oh, dude, I cannot wait if I ever get the chance to speak on a fucking FaZe earnings call. Dude. That's the new goal. I'll stream it too. FaZe Investor Day call. Dude, I'm dialing in as an individual investor and seeing if I get a say. If I can go in the queue, the question line. I'm dialing in. Boys, I'll dial in. Oh, they do go and give us They do go and give us quarterly balance sheets. That's nice. I hate doing quarterly balance sheets in cash flow statements, but it's nice. They're a massive pain in the ass. I do like that they're going to go and give us this every time. Dude, it is so clear. It is hilariously clear to me how much of a shameless pump B. Riley just wanted to do for this company. That has become abundantly clear. Look at that mezzanine equity. Look at that mezzanine equity. Oh, this is going to be a pain in the ass to do. The contract assets is interesting. How much they have under contract right now? 4 mil. This is such a dog shit financial company, yet it's gonna be so interesting to see this thing fly when it IPOs. I mean, I haven't seen financials this bad since maybe Roblox. And Roblox I declared will never really make money. Like, I pretty much said Roblox is going... Did I fucking cancel my numlock? I pretty much went and said Roblox is going to go bankrupt unless they get bought out. I mean, if I had a gun to my head and someone said, after the IPO, what's your view on this? I'd say it's a short. I'd pretty much short it at the beginning of the IPO. It simply... Oh, I forgot how balance sheets work there for a sec. It's just simply, it's such a tough company to turn around at all. I mean, their economics at the moment are dog shit. Their expenditures are hilarious. And their pathway to success doesn't make any sense to me. And I'm used to seeing batshit crazy companies, right? Like I've done Roblox before. I've done a whole bunch of other companies. I've done Redbox, where Redbox is trying to launch their own streaming platform. Yes, the company that you get the fucking DVDs out of, like at the front of a CVS wants to go into streaming, and that's ridiculous. But like, you're telling me, as a company that primarily what you go and do is hire content creators, your general administration cost is $10 million when you're only making $15 million in revenue. You're like, it shouldn't be this high. Even for super young companies, it shouldn't be this high, especially for the business that they're in. The COGS I can go and get being so high, giving you 26% gross margins, I can understand that because they're only taking 10 to 20% of whatever their content creators make. I can understand that. And then there's, putting on events, merch and all stuff like that. But this is just inexcusable. Like, it shouldn't be this high. I mean, your typical, like, well-aged modern company is somewhere in the teens. Like, here, I'll even pull up. I'll do Roblox just for the fuck of it, like another terribly managed company, and then I'll pull up Spotify. Roblox. This is back Q4 2021. I think Match.com may be more recent. I'm not sure which one will be more recent. Fuck it, we'll do Match.com 2020 too, just to show a comparison here. And yeah, I don't have the full year financials out for FaZe yet, but here's Match.com, right? Tinder and all that stuff like that. Q2 2020. General admin, high teens. Here's Roblox, an utterly dog shit company. Still young, I'll give them that. Average about 19% general and administration costs. Versus FaZe over here at 262% or 302%. You cannot survive as a company with an expense that high. The minute and since these guys are going public, every single question that they're going to get on an earnings call is, how are you going to reduce that? Like, it doesn't take a genius to realize you guys need to cut cost. It doesn't take a genius to figure that out. But I guarantee you the book runners, B. Riley, don't give a fuck. They're just doing the pump and dump for all the kids that like FaZe. It's the single biggest layup for them. And now we're actually going to figure out how much debt they have, which is going to be a real fun one. I mean, yeah, this is the most current financial data. I don't have this year. I mean, I haven't gone and looked at the full years yet, but right now I can tell you it's just a dog shit company. It's going to get a huge pop on the IPO. But once all the big boys take a look at it, it's going to get absolutely murked. I mean, their economics are just not there. And they want to start going into the single worst. And they want to start going into the single worst area to go and make money. Which is, without a doubt, oh, I flipped. No, I didn't flip them. Which is one of their big points for growth is like virtual dining in food products. The margins on food products are razor blade thin. Good luck. There's a reason why food only goes and makes money at tremendous scale. Go see Starbucks. Go see, like, Starbucks is one where it's like, oh my God, I got 70 mil in just long-term debt. I mean, I guess that's why they're IPOing, right? Knock off some of that debt, go and extinguish it. I mean, they're gonna have to. Like they have to. Can't be carrying that big of a debt load on there. And it's probably, given their interest cost, I guess, well, they've probably had low interest rates. 3% yielding debt. It's not bad. They don't have, I mean, they have the cash to manage it. They get 14 million cash. They just start knocking it down, though. Because overall, they got 84 million debt. Net debt of 60 mil. It's their cash flow that's actually going to be interesting. No wonder they have so much debt, right? Just having the company live on, they're losing, $9. They're losing for every $15 they bring in. They're losing 26. So it's no shocker there why they have so much debt. They got to bring down their cost. It's just hilarious. And I mean, what was it? They brought in, what was it in their investor deck? When they brought in their big management team. In 2018. So for the past 4 years, I mean, I get it. The probably management that they had before had no fucking clue what they were doing. But once their new CEO came in, I mean, he's got to know how to bring down cost. I mean, the guy's got experience at, and it makes sense. He's been at all record shops. Like I said, FaZe is just a record company. At the end of the day, it's no different from Warner Music or UMG, Universal Music Group. It's absolutely no different. It's just taking talent, putting marketing dollars behind them. Well, the ability to spot it, and then take marketing dollars, push it behind them, and that's pretty much it. And take a piece along the way. But I've worked on the record companies, and their economics are not nearly this bad. CEO, I don't know what the fuck you're doing over there. Get the ship in order. You have to know this too. Or you're about to get absolutely shellacked on earnings calls by every single analyst. The analysts that have some balls. Balance sheet balances, woo! I hate doing quarterly cash flow statements. I may just do the nets. Yeah, I'm just gonna do the net cash flows. I absolutely hate doing quarterly cash flow statements. However, this will go and give us a look at where they're getting all their financing from. I'm gonna assume, just based off of their debt load, it's all through financing. Bad debt expense is never something you want. That's good to go and have on there. Really? So for those of you out there wondering why I'm laughing, it's this line item right here. Cost-based, stock-based comp. So essentially paying your workers in stock. Something extremely common in the tech industry. Extraordinarily common in the tech industry. But they've got about $1 million worth of stock-based comp. Now, I can understand you're a talent group, right? So you got to go and give, and they're IPOing. So they're probably going giving comp to brand new signs and stuff like that. And I can understand that. But it being one of your biggest things in your cash flow statement is hilarious. Where was it? Where was that quarterly cash flow statement? Here we go. Consolidated statement, cash flows. Yeah, 1.1 mil in stock-based comp. I don't know why you guys are paying yourself so high. No fucking clue. For all, I guess for all that hard work, for all the costs you're bringing to the company. Cash flows from investing activity, it's normally negative because you're always buying shit. So nothing wrong there. This is gonna be the real fun one. Cash flow from financing, which for all you non-finance people out there is essentially how do you get money in? Normally it's financing. Normally it's term loans, issuance of debt, etc. Which is how term loans and convertible debt is pretty much the only way that they're able to go and get any type of cash flow coming in. Cash and restricted cash at the beginning. Net change, beginning cash. So, okay. Through all that, they were able to go and generate close to $2 million in cash, mainly because they're getting so much term loans. They're getting so much financing. Fair. Fair. Did I not put in? I didn't. I didn't put in this last quarter's. So yeah, now beginning cash and retained cash at the beginning of the period, 17 mil. So now negative cash flow. They're burning more cash than they're bringing in, internally and externally. So that's why you get negative. Net change in cash and cash equivalents is negative because they burned 11.7 mil and they only brought in 9.3 mil. So they lit 2 mil on fire. To be fair, purchase of property, plant, and equipment. This is probably phase one. They bought $2 million worth of property and equipment. So it's probably phase one in buildings and etc. They bought a big warehouse for phase one. They're moving some of their staff there. That's fair. You're always going to have stuff like that. Always going to have it in a business. That's extremely fair. What's really pissing me off is the hilarious amount of stock-based comp they're doing for utterly no value being created. Especially when other dog shit companies don't even have the balls to do as much stock-based comp as these guys are doing for how poorly their financials are. Like, yo, I wish I could go work at FaZe, get some of that sweet stock-based comp. That'd be pretty lit. All right, gonna be finishing up and putting the financials here in just a minute because we got all the yearlies to go and do. Margins are just deteriorating. Again, they use sales and marketing and G&A. This is their main cost provision. That'll change over time. It's a pretty simple company to understand, in all honesty. Despite their costs just fucking ballooning. Like, why is your sales and marketing is doubling year over year? It's tough. I've seen some poorly run businesses. This is one of them. Again, I get the CEO came in here, but you got to get some of this G&A cost under control, my dude. We've got to sit down and talk about this. Like, I understand. For the most part, you're still growing, but this is kind of ridiculous. Because they got so much debt, they have interest. Don't even give us anything for taxes. Why? Because you make no money. Ooh, they do give a share count though. So we can go and get EPS. And I could go in, I'm not going to go and do I'll go and tell you this right now. I am not going to do a full model out on this for right now. I'm not going to go and do a DCF, especially when you're losing $4.28 a share. It's a little embarrassing. Okay, current assets, long-term assets. Da, da, da. I still don't. I used to have shirts for inventory. I should just really just be typing ASMR. Mechanical keyboard typing ASMR. With lo-fi music in the background. Ooh. Ba-ba-ba-ba. Nothing makes me happier than saying 11111 on any type of financial statement. It's so easy to type out. Again, I'm gonna call it. This may be the media stock short of the year. In fact, I am calling it. Did I mistype something? I did. Hog testes. Okay, we're good. Ba 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 ba. Oh, I swapped these two. This should be 59 and this should be 6. Does my balance sheet balance now? Yes, it does. Okay. On to my least favorite, the financial statements. The cash flow statement. Mainly because I hate modeling out cash flow statements. Oh, there's that stock-based comp again. I mean, what? It's... meh. As a percent of revenue, it's not that bad, but... it's still pretty shit. I'm swapping the lo-fi vibes. Okay. Ba, 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 664, 616, negative 613, 817, 4942, 854, 36. Do we get our magical number? Yes, we do. All of our formulas work. All of our formulas work. All of our formulas work. Something you always want to happen. This isn't a how-to guide. Now the big question, do I post the VOD to YouTube or not? I might just say fuck it. not get the correct answer here. Ah, because this should have been a negative. There we go. Wait, we're off by 1. I don't have any hidden cells. Why are we off by 1? I'm just looking over my numbers. Ah, because this should have been a 4. There we go. The good thing about small companies like FaZe is that they don't really have a whole lot going on their cash flow statements. It's normally their first cash flow state. It's normally like cash flow from operations where there's a bunch of shit going on. The rest of them are all pretty simple. And after handling so many super complex companies, this is just super manageable, actually. Despite me bitching and moaning at the beginning of doing this. A lot of convertible debt being issued because if you're going to go public, you might as well. After all, shares of stock are just fun coupons for businesses. Okay, beginning cash. Not that. 11999. Boom. Ba-boom, ba-boom. Ba-boom, ba-boom. Cool. Alrighty. That's that. I didn't go into super detail. I just want to go and get the 3 statements down and some other things. But that's the financials of FaZe pretty much. We're done. Oh, it took 2 hours and 13 minutes. I mean, it was just 2 quarters and 2 full financial years. But, overall, it's dog shit. I could safely go and say that. Very interesting. Gonna go and actually hide these. Just put them all like right there. Yeah, all right. There we go, guys. May post this VOD to YouTube. Not sure if I will or not, but just want to do some work on FaZe Clan, get all the financials done. We did that. It's kind of eye-opening how badly run this company is. Um, Interesting how some of the things that we learned, like their brand deals and stuff like that. But yeah, hopefully you guys enjoyed. And yeah, I'll see you next time. I might be doing work tomorrow, putting together some stuff, putting together some charts. Maybe the bones of our deck for FaZe Clan. Not totally sure yet. If not, it may be later in the week, or I will be streaming in the evening doing my traditional video game content. Not sure yet. But hopefully I'll see you guys next time, and have a good one.